Good day, ladies and gentlemen, and welcome to your Deveron UAS webcast. It is now my pleasure to turn the floor over to David McMillan. Sir, the floor is yours.
Great, thank you, and good morning, everyone. Thank you for taking time to listen to our story and learn about what we're doing within agriculture technology. My name is David McMillan. I'm the president, CEO, and founder of the company. We've been at this for 4 years as we build out a platform and an incredible landscape to help folks in agriculture use data to drive increased return on investment on their farm. We trade on the TSX Venture under the symbol FARM. Today we are about a $30 million market cap, and just before the holidays we closed a $5.8 million private placement. So the company has lots of capital to aggressively pursue our growth plans and follow up on all the success that we've had over the last couple of years. So I'm going to walk you through our presentation. I know 30 minutes can be a little bit tight. I will leave my contact information at the end, and I would encourage anyone who would like to follow up with us to feel free to email or call, and we can sort out a side meeting. So bring up the second slide here, just to go through a couple key highlights that we think about when we think of Deveron. So we've been achieving record annual revenue growth. In 2019, we were up 310%. Through the third quarter of 2020, we were up another 60%. So we're continuing to see a great trend of increased revenue. As I mentioned at the beginning, we just closed a $5.8 million financing, which is going to allow us to continue to execute on our growth trajectory, which I'll walk through today. We are a kind of like a hybrid of a technology and service company. So we have a network of people across Canada and the United States that work on farms and collect information for farmers. And then we also turn that data into insights. And like within this plethora of businesses that we have a really high retention rate, which is leading to obviously recurring revenue. We've seen a great success of our digital insight sales, which is an 85% gross margin business. And it's where we're going to be investing a lot of time and capital as we move forward, working on conversion of our users into digital and driving margin expansion. I think from a standpoint of opportunity, the one thing I also like to highlight for new people to the story is agriculture services has traditionally been a very fragmented and highly localized market. So across the U.S. and Canada, you have lots of sort of mom and pop sole proprietor offerers that are providing recommendations to farmers, and the issue is they don't have one consolidated technology stack that they can leverage to improve their day-to-day operations. So it leads to this inefficiencies, I guess, around pricing and service for lots of national customers. So we completed our first acquisition in May in 2020 in Texas of an agronomy group. We're looking to do more of those as we move forward. And to my count, there's over 15,000 of these individual agriculture service companies. The last thing that we want to highlight is a little bit of blue sky, but perhaps some of you on the call have been looking at ESG themes, and agriculture and sustainability is actually a really important theme for us. So we're doing a little bit of work today in carbon sequestration, which is the idea that agriculture farmland can be used to sequester carbon and create carbon credits. So I'll go through that from a very high level today. And again, if everyone has any questions, I'm happy to follow up in the future. So coming on to slide 3 here. So our mission is pretty simple. It's really to take a very analog world, which is agriculture, and has had 100 years of multiple family generations making decisions just based on how they've always done things, to enabling folks to use data to make objective decisions, improve their productivity and efficiency in their farm. And we really believe that not only is every farm different, but every acre is different. So applying the same amount of seed, the same amount of chemical, the same amount of fertilizer on every acre of farmland doesn't really make any sense. The data shows that we should be varying the rate of what we use, and we build products and services to allow that opportunity to happen. And the interesting problem in agriculture is really that at the end of the day, everybody who's sort of been the status quo in the industry has been selling inputs. So if we're going to rely on the industry to change something that is a huge driver of profit and revenue for most of the monopolies in the industry, we're not going to see much. And many of these people that sell inputs are driven by commission sales. So this is a big problem, and it's not leading to much change, which is why we're tackling it. And when you look at corn production or soybean production, and this goes through to Canada and the United States, this opportunity is monumental. Every single acre of farmland that gets a seed put into it will have some sort of input applied to it. So when you think of that, it's every farmer in North America has an opportunity to change their production decision using data to enable an objective outcome. So we really see the solution as something where if we can provide folks in the agribusiness world an opportunity to look at their data, understand where they can vary their rate, if they could increase their yield by 20 or 30%, or they can decrease their cost by 20 or 30%, there's a significant economic opportunity and value proposition for farmers and other folks in the industry to use data to change the way that they farm. And this is really where we come back to, I think we probably, especially if you live in a city like myself, you maybe have been naive to just how big farming is. So here in Canada specifically, it makes up $75 billion of exports annually. Across Canada and the United States, there's over 1 billion acres of farmland, and that's billion with a B. So from us, when we think about what is the potential of a total addressable market, we're really focused on that. And given our product and service makeup today, capturing about 10% of that market could create $1 billion in annual net revenue opportunity. So when we build companies in venture capital, it's always about going after high margin business that have huge user adoption opportunities, as well as being in one of the largest markets that I think kind of exists. I'll briefly walk you through a landscape of our team. So as I mentioned at the beginning of the call, I'm the president and CEO. My background is mostly in sort of financial markets and economics. We've raised over about $30 million in venture capital for public companies. And I've surrounded myself with a group of really incredible folks that have either grown up on farms or spent over 20 or 30 years in agriculture. So we've got a great operations team that has spent significant time selling fertilizer, understanding what moves farmers. And so all of us have sort of been in the trenches for the last 4 years, really trying to figure out what our customers need. And then on the board side, we've got a great leadership group led by Bill Linton, who is our chairman. Bill is the ex-chief financial officer of Rogers Communication, which is one of Canada's largest telecommunication companies. Bill's also on the board of the Toronto Stock Exchange and Empire, which owns Sobeys, one of Canada's largest grocery retail chains. So Bill's been a prudent investor in early stage technology, and himself and a strategic group of individuals invested in the company in May and joined as chairman. And they were significant participants in our recent round of financing that we closed in December. So it's been great to have Bill's mentorship and leadership in the company as we push towards more of a productization approach, driving high margin in our technology businesses. And, for us, it's great to have a little bit of gray hair in the boardroom that's had some success over the years. Some of you also may know Roger Dent, who's a fairly prominent Canadian small cap investor. So we've tried to round out like a great group of people at the board level that have experience not just in commercializing technology, but also in sort of small cap world, because we know the challenges that exist sometimes for small companies. So now I'm just going to get into a little bit of like what we do, and it's always hard in 30 minutes, I think, to specifically walk through all of the value propositions that we provide to farmers. But from a very high level, I want to remind everyone of what I started with when we started the presentation, which is we do two things really well. One is we have a national network of people that provide almost last mile services to farmers across Canada and the United States. And some of these services are soil sampling, where we go out and collect dirt for farmers and then help them understand what is the makeup of their farm and what chemicals or fertilizers could they be using in better amounts. We also provide in-season tissue sampling, where we're going out and collecting farm data of how plants are doing in season so farmers can make on-the-ground decisions that year. We have a national network of drone pilots that collect remote sensing imagery So everything you can think about with Deveron is very high fidelity information that has incredible value in terms of benchmarking how a farm is doing throughout the season. And our uniqueness and value proposition of this is because we have a national network, we're able to offer a price consistent approach to large companies and small farmers everywhere. Everyone gets the same price. It leads to better unit economics for users. And our users don't have to worry about necessarily doing these tasks themselves. They can outsource all of the data collection. They get a standardized file back, which they can then use to either make their own interpretations, or we upload it directly into their equipment and they move on and start recognizing increased yields or reduced costs on their farm. From a standpoint of data insights, we really focus on these three areas of one is analysis and prescription. So as you can imagine, we collect data for farmers. And well, what does that mean? So if we take a snapshot of a farm and we notice that have too much nitrogen, we can create prescriptions that then go into their fertilizer spreader that varies the rate of fertilizer that farmer would apply in any given year. So this is like a digital file that we create on the cloud. It gets seamlessly sent to the farmer's tractor, and it tells the tractor what to do. There's so much technology now on the farm in terms of hardware, and we're really working on the brains behind of telling that hardware how to apply better. Scripting is along the same insight, but it's like looking at every acre of the farm and saying specifically, okay, using the data that we've collected, what kind of recommendations and insights can we write with respect to how much of a seed plant we need to use, et cetera. The third area that we spend a lot of time and actually do quite a bit of revenue in is in data management. So if you can imagine the average farmer today, they have written tabulation of decisions they've made over the years on the farm that's in the barn. They have Excel files, they have CSV files, they have some files that live with their equipment dealer. There's this massive opportunity to consolidate all of this information into one standard platform, which will then allow farmers to leverage this information and make better decisions. So by consolidating information into one platform, we get big opportunity with data. We also drive information gathering for our customers, which drives our recommendations for yield. And now how does this all happen? So you can think of like our multi-pronged strategy as being, we get on farms and we collect data. It's kind of the hard, laborious work. It's lower margin for us, but it starts the customer journey around a customer acquisition. And then what we tend to see is after the first year, farmers start to see value in this information, and they come back to us and they say, hey, here's my problem. I have, too much soybean costs. Is there something you can help with? And we can write a prescription using the data that we collected the year before on how to recommend a differing rate of seed. And sometimes we might see upwards of a 30% cost saving to that farmer just by interpreting his information and looking at the objective data that exists on his farm as opposed to, well, we've always bought 33,000 seeds per acre. And then as we go through that second year where we start to see validation of the analytics and the farmer has a benchmark in his own personal P&L where he can say, I collected data and I analyzed it and made one recommendation, I'd like to do the full package where we start to see our customers enroll all of their acres using all season data collection as well as all of our data analytics packages. And this is where we start to get the most leverage for not just our customers, but also for our revenue model. So I think, now that we've completed our round of capital and as investors, everybody's interested in, okay, what will we be doing next? I really think of our growth strategy around, three kind of core things. And so the first is through this idea of consolidation. Agriculture provides a really unique opportunity in that, as I mentioned, it's a highly fragmented local market of agriculture service businesses that have huge distribution networks. So they have local trust of farmers. They have opportunity for us to do sell-through. So we've started this mantra of local consolidation. We did our first acquisition in May in 2020 in Texas. I think we've worked out all the kinks of how that's working. These businesses are generally for sale for quite low multiples from a standpoint of maybe 1 to 2 times revenue. And they're all cash flow positive, profitable businesses as they've been sole proprietors for most of their life. It gives us 3 key things, which is a distribution of our high value insights. So Now, instead of talking to 5,000 farmers, we have one local connection that already has those relationships, so they act almost as a channel sale partner. Second, we get territory expansion. So if you pull up a map of North America and Canada, or Canada and the United States, when we first started the company, we had 2 pins in Ontario. We now have, probably 25 pins across Canada and the United States. And by buying these businesses, we add more pins to the map. And then the third is market development. So when we buy these companies, they generally sort of have, local products that are maybe potentially scalable into other ideas. And we also get to know, people in Ohio better, people in Texas better. So we think it's a really great way to accelerate not just our revenue growth through consolidation, but also accelerate the stickiness of our users and our ability to sell our own products, through these networks. Just quickly, I wanted to walk everyone through the sort of multiples that exist as well. So as I said, we acquired our first company in Texas in 2020. That was at a 0.6 times revenue multiple. The typical way we've structured these deals, and we're looking at doing them, are on a 3-year earnout. It's sort of like half cash, half equity. And when I think of things, I think of them in like a cost per acre under management. So when we can acquire farmland for $2.50, and immediately our services and products generally generate $5 an acre, you start to see this very accretive opportunity of not just acquiring small profitable companies at low multiples, but also the sell-through channel of our own products and services. And then I have a couple companies here that we've sort of looked at and we're under due diligence with, just to give people a perspective of the revenue run rate, EBITDA multiples, and the valuation that owner-operators in agriculture sort of view things. The other strategy we have is really just internal organic growth. And I think a lot of Canadian public companies tend to forget that, yes, acquisitions are an important part of growth, but organic growth is still core to what we've always done. We have now a user base of roughly 500,000 acres under management across Canada and the United States that pay for our products today. Many of them are just single product buyers, though. As I mentioned in our customer story, there's lots of people that are going through this journey today of buying products, and then we're trying to convert them into digital. So I think probably our makeup is about 15 to 20% of our users have multi-product buys today. And I think as we move forward, we're going to see an acceleration of that percentage of these are customers that already trust us who are going to start buying digitally. And another way that we do that is through our partnership development. So as I mentioned, agriculture can be quite fragmented. So we need to go from a standpoint of having farm users that we deal with, and to scale also have relationships underneath them. So across the entire industry, we work with equipment dealers, input dealers, processors, ag retail, and digital folks that all have connections to the farm. Finally, when I mention this ESG strategy, it's kind of, again, this is the blue sky, but I think something that we're really excited about this year. We're already generating some revenue, maybe about $250,000 in support for soil sampling. And so we'll be focusing on that as we move forward. And there's a huge opportunity around carbon credit and sequestration in Canada. So just to walk everyone through a brief revenue growth of the company. In 2017, we were a couple $100,000. In 2018, about $500,000. And in 2019, we started to hit our stride where we just covered about $2 million in sales. And this year, we're sort of on track for roughly about $3 million. So at the bottom, you can kind of see just a little bit of how the business model works. We sort of get engaged with the customer. It's mostly data collection story where price per acre is $5 an acre. And then we see this migration to collection and digital, which leads to sort of a doubling of products and services fees. And you can see the revenue or the gross margin profile sort of adjust as we move along. Here's our cap table and ownership. So we have 68 million shares out. There's some warrants from the recent financing, which hit the table. And then the rest you can see here. I'm going to leave this like this so everybody can write down my information.
And that concludes this webcast. Thank you.